Hi, so today I'm going to explain about candlesticks and why they're important to you. So what are candlesticks anyway? Candlesticks are a kind of analysis that was developed in Japan hundreds of years ago for analyzing the price of rice. But today, candlesticks can be used for other kinds of commodities and can be used for analyzing the price of gold, silver, stocks, and forex. So what are candlesticks? So candlesticks are things like this. And they're called candlesticks because they look like candles. And basically we have two kinds of candlesticks. We have bullish candlesticks that I'm going to represent using green. And there are also another kind of candlesticks that they're called bearish candlesticks that I'm going to represent in red. So let's write here bullish candlesticks and bearish candlesticks. So bullish candlesticks are used to represent a bullish market. And what's the bullish market? Bullish market is when there are more buyers than sellers of a certain product. So if you look at a bull, right, the bull has horns and the horns go like this. So that means the prices are going down, up. Prices are going up. And a bearish candlestick, on the other hand, represents that it's used for a bearish market. So what is a bearish market? So if you think of a bear, right, when the bear is about to attack you, so the bear does something like this, right, with the bear's hands like this. So that means that the prices are going down. So there are more sellers than buyers of a certain product. And this part of the candlestick, right, is called body, the body of a candlestick. And these things here, like up here and down here, they're called shadows, like the shadows of a candlestick. And for a bullish candlestick, right, so the bottom of the candlestick represents the lowest price, the lowest price of that product given a certain T, like the time. And the time can be could be 1 minute, 5 minutes, 1 hour, 1 day. It depends on the graph that you're using. So this thing here on the top of the candlestick represents the highest price of that candlestick. And these two things here are the same for the bearish candlestick as well. So for the bearish candlestick, this would be the lowest price, and this here would be the highest price. Alright, so what's the difference between these two? The difference between these two comes here. So here, this bottom of the body represents the start price. The start price of the product. And here represents the end price of a certain product. So the final price of that product. And on the other hand, here on a bearish market, this one here represents the start price, and this one here represents the end, like the final price. Which makes sense, because as you see, the start price starts low and it ends high. So that means a bullish market, right? And as you can see here, the start price starts high, but then it goes down, and then price is lower than the start price. So that means a bearish candlestick. Next, we are going to see in a graph how this will affect the price of a certain product. Let's go.